Good morning, good morning. How's it going, everybody? Nice to have you all join me. As you probably noticed, gold is heading higher. And where is it heading higher from? From our institutional demand zone that we located. Interesting, isn't it? Well, not really. If there's any spot where price was going to head higher from, it would have been from an institutional buying zone. So welcome. We're going to take a look at that. We're going to dig deep into the different time frames and take a look at exactly what's happening, and show you the new zones that are being created. So let me just shrink me down here. By the way, you like my new hat? Oh, it's not new. I've had it for a while. I thought I'd bring it out for display today. Let me just shrink myself down here, and there we go. There we go. Now you can see all the time frames. All right, well, so let's take a look and examine each of the time frames individually, and we'll look at whether they are bullish, bearish, what's going on here, okay? So as we always do, let's start by examining the higher time frames. As you know, we have a 6-month chart that is screaming to the upside. So it is bullish. Okay. The structure that it's creating is obviously to the upside, so it is bullish. We don't have a serious area of demand until much lower down on the chart. That's in the 1800s. Is the price ever going to get down there? It's possible. Anything is possible. I wouldn't rule it out. Okay, 1800s is where the demand is. This is where what I see, so I'm just pointing it out to you. Okay. Now let's go over to monthly chart, and this is what we got. Uptrend. Now remember, the ascending trend line is all the way down here. Okay. And so that's quite a distance away from where price is right now, as you could tell. Price is up here, and if it were to realign with its trend line, that's a far drop. All right, so it's overextended on the monthly time frame. This we know. We've talked about this before. Major overextension. The chart that I am focused on is down here, the weekly time frame, and the reason being is because we've got a nice uptrend on here. We have the ascending trend line here. We have institutional demand down here. But the thing is, price didn't want to retrace to it. So far, it hasn't retraced. And we're getting pretty close to this, this uptrend expiring. Okay, we were talking about this in class. We have this uptrend expiring May 5th. So if price doesn't start to decline and head down towards that area soon, then this trend line is going to not be very useful in the future. All right, this is something that you have to recognize when looking at each of the time frames, because we're trying to determine what are the banks doing, what time frame are they doing it on, and how is price going to play out based on what is taking place on that time frame. I believe the time frame that is in play is the weekly time frame, but the more this plays out to the upside without getting a retrace, the more that dynamic changes on this chart. Okay, if this continues higher and this trend ends, then we're just looking at major overextension here. In other words, the institutions are not creating structures that they are likely going to use to facilitate moves to the upside. So weekly time frame, the more it goes up, the more it's not looking too good. Okay, yes, do we have an upward trend on monthly? Yes, we do, but like I was saying, the distance between where price is now and where this trend line is, and not to mention, the latest area of demand. Okay, we're getting new areas of demand being built right now. When we look at the charts, we can see demand is coming in, but price is way overextended. This is not the type of structure that we usually look for or usually find when the banks are creating structures that they're going to use to facilitate a move higher. All right. So let's look at what we have on the daily time frame. Daily time frame, is it bullish? Yeah, it's bullish. You know, is it going upward? Yeah, it's going upward. Would I say this is a strong upward trend? No, it's not a strong upward trend. Why would I say that? Well, because there's no structure here. Okay, there's no structure for an upward trend. For there to be an upward trend, we would need to have an ascending trend line. And I know some people would say, well, isn't there an ascending trend line there? Isn't that an ascending trend line? No, it's not. Not based on what we're looking for. And what we're looking for is based on a lot of historical chart analysis, okay? A lot of historical chart analysis to determine what kind of structures do the banks create when they're actually creating an upward trend. There's a difference between an ascending structure and an upward trend. And this is what we teach at the school. I'm not going to delve into it here, but there's a difference between those two. And a lot of people are just drawing trend lines and connecting points when we have structures that look like this. But here at the school, we know that this is not what is created when the banks are creating an upward trend. This is typically not what's created, okay? So knowing that, we know that there is no upward trend here, okay? When we're looking at this chart and trying to determine if there's an actual upward trend, there's no upward trend here. What we have been able to determine is that the banks have created institutional buying here. And the latest area I have drawn out for you was here, okay? And as you can see, price contacted this area of demand, okay? So if there's any doubt in your mind whether institutional supply and demand zones and locating them on the charts is valuable, there you go, all right? It's right there shown to you. You saw before price went up. You saw when price when the zones were created. All right, I drew the zones. I showed you the zones. Now you see price coming down into that area, and now you see it rallying up from there. So I also pointed out, made a note on my chart that should this area have been removed, it would have triggered a large drop in price. Okay, if that zone were to be removed, it would have triggered a large drop in price. Okay, instead they're holding the zone and now pushing up. And if you remember, I drew an arrow here, back here, showing the potential move to the upside. So this is what's going on right now. They're buying over the short term because the daily chart represents short term. Okay. They're buying to the upside over the short term. Medium term, the structure is on the verge of not being usable unless if they come in with new demand here on the medium term time frame, which is the weekly chart, we're going to start to get the same type of situation that we have on the monthly chart, which is demand coming in, but the trend line and structure is so not properly formed, and we're going to have a lot of just price removing itself from the normal structure of price when looking at upward trends. So it's too much. It's too overextended here. Way too overextended. I suspect what's going on here is retail traders are coming in after they're seeing the buying. This is being instigated, this momentum, by institutional buying taking place at the 3,000 mark here. But this is so dangerous. I mean, when you understand what's really taking place on the charts here, it's very, very dangerous to be going in long at these highs. When we take a look at the 4-hour time frame, what do we got here? So we have institutional supply being taken out. So some demand will be coming into this chart. This structure is very poor as well. We had the trend line, we had the trend broken. Right back here, let me show you. The trend was broken here when institutional demand got taken out. And so now we are coming in with new buying, but this whole structure is really poor. If price was to make a new high here, let me just readjust this chart here. If price was to make a new high, boom, boom, and we were to get something like this, that would be more legitimate than this structure here on the daily chart. So this would be okay for creating an ascending structure. So basically we would be having an upward trend on the 4-hour time frame, which is very short term, okay? 4-hour represents very short term. If they were to create an ascending structure here or an upward trend, that would just be able to support a short-term move to the upside. But in the process of creating a lot of overextension on the other time frames. So this is not very sustainable, okay? Yes, it's moving to the upside. So what? Okay? If you want to jump in and buy a house whose foundation is very unstable, by all means, do so. I wouldn't want to live in a house with an unstable foundation because eventually that thing's going to come down. You don't know when it's going to come down, but it's going to come down. I would much, much rather prefer to see a nice decline in price, like soon, nice decline in price to demand that is being supported by an uptrend, and then I would be looking to buy there because that is very stable, that is very sustainable, and then we can predict upside potential. We'd be looking at supply zones on the lower time frame. We'll be placing our targets there, and then targets even higher. Because do I think over time this can go much higher? Yes, I do. Okay, but there's only two ways that price is going to go higher. Okay, it's not going to be because of retail traders buying. All right, and I'm talking about a sustainable move higher. It's going to be because institutions are coming in and buying, but when they come in and buy, it has to be in a sustainable way, okay? Because when we don't have the proper trends to sustain the move to the upside, then from my experience, and I have quite a bit of experience looking at historical charts and knowing what to look for. Okay, when I study historical charts, I'm not looking at support and resistance. I'm not looking at Bollinger Bands. I'm not back testing any type of any type of trading systems. I'm not doing any of that type of stuff. I'm not looking at how price reacted to EMAs and all that type of stuff. I'm not looking at that. I'm looking at what type of structures and trends were created by the banks when price was moving to all-time highs in the past, and what typically is needed to support large moves to the upside. That's what I have studied, okay? So I know that when we have major overextension as we have now, we tend to see major drops in price so that it can create structures to support the later moves to the upside. All right. The voice is coming in less. Maybe my microphone levels are a little bit low today. Don't know why. But yeah, keep your eye on all this stuff, okay, guys? And don't think to yourself, The other day I was on YouTube looking at some of the comments because I love to see the comments that you guys leave me on YouTube, and I appreciate them very much. But I saw a comment somebody left, and look, we all have our different perspectives, okay? One thing that I'm trying to teach you here is how to be consistently profitable in the markets. Who cares about these little moves here and there? You have to be able to do something that's repeatable, okay? If a structure on price was terrible, okay, and it's not showing you something that's sustainable, and you jump into the position and you made money, you shouldn't be patting yourself on the back for it, because what you don't realize is that you made money on something that was low odds, all right? I'm not interested in making money on something that's low odds, because something that's low odds is not repeatable. If you were to do something that's low odds several times, you would more likely than not lose money the vast majority of the times. If you want to be in this trading business and you want to outlast everybody, if you look at the stats, most traders lose money. The vast majority of traders lose money. And those that are profitable, out of those that are profitable, they are not profitable for a very long time. All right. After 5, 10, 15, 20 years, a lot of those that are profitable end up losing their money. And the reason being is because if you don't stick to something that you know has high odds and is repeatable and has logic behind what you're doing, then you're not going to be consistent. And so, people have told me, oh, gold has gone up and you haven't bought. Yeah, and that I'm perfectly happy with that, okay? I've bought other things that have gone up because they were wonderful setups and high odds, and I've made money with them, okay? And I could repeat those things over and over and over again. I know exactly why I'm getting in. I know exactly what price is doing on the charts, and the odds are stacked in my favor. If there isn't a setup, I'm not going to trade it. I don't care if it continues to go up, okay? That means nothing to me. If the setup isn't there, I'm not going to trade it. Period. I don't have those feelings of, oh, but I could have bought it at 28,000 and now it's at 3,000. I don't have those feelings at all right? Zero. Other people do, but I don't. And when I was reading this comment, I said to myself, this person obviously has those feelings, and that's total amateur type of thinking. All right, it's a total amateur type of thinking. I'm not an amateur. I do this for a living. I need to sustain myself with this. I need for it to be repeatable. I need for it to be logical, and I want to be consistent with it. And the way that you find consistency is to find something that is repeatable and that is high odds, like I said. So I don't want to dip into the market when I think something might happen. I don't care about thinking. I care about something that is proven. All right. I'm looking for something that's proven. And I've studied the price action long enough and continue to do so to know what is a high odds and what is a proven situation. And if it doesn't come, then I don't trade it. Period. Okay. Gold could go higher, sure. If you're getting into gold at these highs, I'll pray for you. Okay, because you don't know how high it's going to go, and you don't know how dangerous this is getting at highs like this. I would wait for a pullback. You know, it may not seem like it's going to happen now, but you don't need to trade now. Okay, nobody's forcing you to trade now. We're in March. Okay, it may be April or May or June or July. Okay, maybe it's August. But when the time is right and you do buy, then you know exactly where to put your stop loss, where to have your targets, and then you just sit back and relax. You don't have to worry about, oh, are they going to keep pushing price up? This doesn't look sustainable, because it's only after you get into a position that you start analyzing all the details, right? You ever find that? I mean, I know I went through that experience when I first started trading. You're so eager to get into a trade, so you just jump into a trade. And then once you're in the trade, that's when you start like really over analyzing it and thinking to yourself, oh, gosh, that structure doesn't look so great. I hope it comes through for me. I hope by some magical power that this structure is going to start to do something that it typically doesn't do, you know, and this is not the way to trade, okay? You have to do the thinking and the processing beforehand and be objective beforehand. And if it's not there, don't worry about it continuing to go higher. Don't fall for that. Don't fear the missing out. That's just nonsense, okay? You got to remove yourself from those type of feelings, all right? Anyways, that's what I have to say. Young traders tend to have the mentality of, if you're different from me, you are wrong. Oh well. Well, whatever. They'll soon learn that there's a lot more to life than that. When they blow up their account for the 13th time, that's okay. Since I started trading, I've never blown up my account, not once. Not once. Okay? Since I started trading in 2013, I never blew up my account, not one time. Have I made a lot of mistakes? Yes, I did. But I knew that I didn't want to trade large size. Okay? I listened to the advice of traders that were doing well. Professional traders, one thing they said was, don't trade large size. So at the beginning, I didn't trade large size, and then when I started to get really good, I didn't, go crazy and put on huge size, because I knew it was going to take time for me to be able to do it consistently. You have to understand that there are things that you don't know, okay? There's things that you don't know that you don't even know, okay? That's the thing. And so that realm that is mysterious and that you don't know, just recognize that one day you'll start to know those things, and you'll be thankful for not rushing into trade large size. All right? So just keep that in mind. All right, my friends. Okay, let's leave it at that. I think it was a lot to think about. Just stay focused on what's taking place here on gold. Don't rush yourself. Don't jump in. Don't fall for the hype. If this goes to 3,100, whoop-de-doo, okay? What's important is watch price structure when price gets there. That's what's important. Watch to see what they're doing as price gets there. Let them create the map for you, because then later on you can use that map to help guide you, to help, get you into the right position, know where your stops should be, your targets, okay? Let them create the map. Once the map is created, then the path is set for you, okay? But when they're in the process of creating the map, it's not a good idea to be trying to anticipate what they're going to do as they're actually doing it. Not a good idea. Okay, guys, that's it. I'll leave you with that. Thanks for joining me today. And until next time, arrivederci.